Good morning and welcome back to Dark Gamma Pre-Market Analysis. I'm Samantha. It is Tuesday, March 24th, and we are opening with a bearish gap this morning. The SP 500 is sitting at 6,550.9, down 30.1 points from yesterday's close of 6,581. The tone coming into the open is cautious, and the options market is telling a very interesting story about where we could be headed today.
That's right, Samantha. That bearish gap of roughly 0.46% is meaningful, but here is what really stands out. Max pain is all the way up at 6,670. That is more than 119 points above where we are trading right now. The gravitational pull toward max pain is real, and if we see dealers' hedging activity kick in through the session, there is a structural argument for a grind higher from these levels.
And let's frame the field for our viewers. The expected move today gives us a range of 6,533.8 on the downside and 6,628.2 on the upside, so roughly 47 points in either direction. We are already trading very close to that lower boundary at the open, which means the downside is fairly limited if the market respects that range, but a break below 6,533 could accelerate selling pressure quickly.
Exactly. And when you layer in gamma exposure dynamics, trading near the lower bound of the expected range tends to bring in more dealer buying as they rebalance hedges. So the risk-reward actually tilts toward mean reversion unless we get a macro catalyst that breaks the model. Eyes on that 6,534 level as the line in the sand for the bulls this morning.
Sector picture is split right down the middle. Energy is the lone bright spot, up 0.30% in the pre-market. On the other end, Consumer Discretionary is the laggard, off 0.90%. And the Magnificent Seven are not helping the tape at all. Every single name is in the red, with Tesla leading losses at down 0.79%, Meta and Amazon close behind, and even Microsoft only off 0.17%, which is relatively the best of a bad bunch.
The broad weakness across mega-cap technology is a headwind for index performance given how much weight those names carry. But the fact that energy is holding up suggests there is some rotation happening beneath the surface. Traders should watch whether that defensive and commodity-linked money continues to find a home through the session or if this is just pre-market noise before everything resets at the bell.
Bottom line for the Dark Gamma community this morning, we open bearish close to the lower edge of the expected range, with max pain sitting well above us as a magnet. The scenario favors a potential recovery attempt intraday, but confirmation is everything. Watch 6,534 as your key support, 6,628 as the upper target of the range, and 6,670 as max pain. Stay disciplined, stay data-driven, and we will see you inside the market. Let's go. Across the board, the Magnificent Seven are opening in the red this morning, with losses ranging from roughly 0.2% all the way down to nearly 0.8%, painting a cautious picture for large-cap tech heading into the session. The collective weakness suggests some risk-off rotation, though none of these moves are dramatic enough to signal a major breakdown just yet.
Microsoft is holding up best of the group, down just 0.17%, making it the clear relative strength leader this morning, while Tesla is the laggard, sliding nearly 0.79% in pre-market trade. Meta and Amazon are also dragging near the bottom, both off roughly 0.70 to 0.73%, which puts pressure on the ad revenue and consumer spending narratives.
Worth noting on the macro side, comments out of the UK around the need to stay agile on energy costs could be feeding some of that broader caution, particularly for companies with significant international cloud and infrastructure exposure like Microsoft and Alphabet. Alphabet itself is down 0.58%, sitting right in the middle of the pack, with its round number 299 to 300 level worth watching closely at the open.
The diplomatic angle is interesting too. A state visit from King Charles with a joint session address could briefly lift sentiment around transatlantic trade and tech policy, which may provide a subtle tailwind for companies with heavy European revenue exposure. For now, though, the overall tone for the sector is defensive, and traders will want to watch whether these pre-market levels hold or if selling accelerates once the cash session opens. Before we continue with today's analysis, we have a quick message for you.
Don't go anywhere.
Want to see exactly what institutions are doing in the market in real time? Then this is for you. Exclusively for members of the Dark Gamma community, the SPX trading platform is currently in beta, and access is completely free until the official launch. Go to the link on screen, sign up, and in the discount field, enter the code shown on screen to also activate 1 free month on the institutional levels bot tool. From the platform, you will see the complete market X-ray, institutions trading live, liquidity zones, points of interest, unusual positioning, everything that moves the price of SPX visible on your screen in real time. No prior experience needed. Just get in, explore, and start seeing the market the way institutions see it, like you never have before. Take advantage of this access before it closes.
There's your invitation. I forgot to mention that both Billy and I are there with you in real time, with our AI analysis of unusual positioning and other key metrics.
That's right. See you there. Now let's get into today's earnings.
This morning before the open, Smithfield Foods leads with a $9.2 billion market cap in the consumer defensive sector, carrying a very low beta of 0.4263 and a tight expected move of just 2.6%, signaling the market expects a calm, range-bound reaction. Core and Main and Cattler are also reporting pre-market, but represent smaller industrial names worth monitoring for sector sentiment.
After the close tonight, GameStop takes center stage with a $10.3 billion market cap in consumer cyclical, and despite its low beta of 0.6039, the options market is pricing in a 5.3% expected move, reflecting lingering speculative interest that can spike gamma exposure around earnings. AAR Corp and KB Home also report after hours, adding industrial and housing data points to the session.
Tomorrow pre-market, PDD Holdings dominates at $134 billion in market cap within consumer cyclical, with a beta of 0.8121 and a significant expected move of 5.8%, making it the most impactful single print of the entire two-day window for the ESAP 500 consumer growth trade. Paychex and Chewy also report pre-market, with Chewy carrying an outsized expected move of 8.4% relative to its size.
Tomorrow after the close, Carmen Holdings stands out with the highest beta of the week at 1.4491 and an expected move of 5%, while Jefferies Financial Group at 1.8934 beta and a 4% expected move could influence open interest positioning in financial sector options into quarter end. JBS rounds out the session as a defensive name with a contained 1.9% expected move.
Crude is going to gap higher on this, and that feeds directly into the energy cost narrative Reeves was flagging, so European equities are walking into a very uncomfortable morning.
The 0 days to expiration crowd is going to be extremely active at the open, trying to price in the tail risk from the Middle East headlines.
But realistically, geopolitical fear is outweighing any ceremonial news flow this morning, and open interest in put options across energy and defense names surged overnight.
Watch the 2-hour candle after the open very carefully, because if gamma exposure flips supportive near the prior close, we could see a fast snapback that traps the early put buyers.
Looking at the SP 500 with spot at 6,550.9, the nearest call strike worth watching is 6,600, which just exploded in open interest by over 2,137% overnight, adding 6,114 contracts to reach 6,400 total. That kind of aggressive fresh positioning makes 6,600 a very strong resistance magnet for today.
On the put side, the nearest strikes are 6,390 and 6,150, with open interest surging 896% and 1,620% respectively, both seeing massive fresh buying overnight. That explosive growth in downside protection directly below spot signals traders are aggressively hedging a move lower, pointing to support tests around 6,390 first.
With max pains sitting well above at 6,670, there is significant gravitational pull upward through the session, but the put-to-call ratio across all near expirations running above 1.59 suggests the crowd is leaning defensive. The 6,600 call wall and 6,390 put floor essentially define today's expected range.
The gamma exposure implications are notable here because that 2,000+% overnight call build at 6,600 was nearly all new open interest, meaning dealers likely need to manage that level carefully as spot approaches. Traders should watch whether spot can reclaim 6,600 for bullish continuation, or whether the fresh put open interest below drags price towards 6,390 as the near-term support line. Let's close with the 0 days to expiration gamma exposure. The gamma flip is at 6,546.
Above 6,546 market makers are long gamma, they stabilize price. Below that level, they're short gamma, which amplifies moves.
The call wall at 6,675 is the strongest resistance today. Heavy call open interest forces dealers to sell into any rally there.
The put wall at 6,440 is the key gamma support. Dealers are forced buyers below that level.
With SP 500 at 6,551, we're above the gamma flip, a stabilizing environment heading into the open.
Let's look at the levels where institutional players have concentrated the most liquidity. In the annual analysis, the dominant level is the 6,671 level, above current price, with maximum liquidity concentration over 23 sessions.
These levels represent zones where the highest institutional liquidity has accumulated over the past year, making them key support and resistance areas for SP 500.
Over the past week, the level with the highest active liquidity is the 6,576 level, above current price, with maximum liquidity concentration over 4 sessions. Recent activity confirms strong institutional interest in this area.
When price approaches these levels, watch the market's reaction closely. These are zones where major players have left a significant liquidity footprint.
If you want this level of market intelligence every single day, join Dark Gamma right now. Bots working for you, whale levels, real-time institutional positioning, opportunity scanners, and gamma exposure updated by the minute. You also get access to institutional liquidity and options levels for any ticker, ready to drop directly into your TradingView indicator. Exactly where institutions are positioning. No noise, just data. Dark Gamma is the edge that separates winning traders from the rest. The information that moves the market in your hands today. The link is in the description. Click it now. We'll see you on the inside.